Hello everyone and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 18th, 2025, and we're taking a deep dive into one of the most watched stocks in the world, Amazon, ticker symbol Amazon. We'll be covering the latest news catalysts and then breaking down the charts to see what the price action is telling us. First, let's talk about the news because it has been a significant driver for Amazon lately. The company reported stellar third-quarter earnings at the end of October, with total sales growing 13% year-over-year. Crucially, its high-margin segments showed incredible strength. Amazon Web Services, or AWS, saw sales jump 20%, its fastest pace since 2022. The advertising business grew even faster, up 22%. This strong performance led to earnings per share of $1.95, a massive 36% increase from the prior year. Adding to the bullish sentiment is a landmark partnership with OpenAI, where Amazon will provide cloud services in a deal valued at $38 billion over 7 years. This move helps solidify Amazon's dominance in the crucial cloud infrastructure space. Fundamentally, analysts are pointing out that despite its all-time high price, its forward P/E ratio of 28.6 is still reasonable compared to its peers. So, the fundamental picture looks incredibly strong. Now, let's see how this news has translated into the price action on our daily chart. Looking here at the daily chart, I've filtered the view to start from late October, and you can see the massive impact of that earnings report right here. On October 31st, the stock gapped up dramatically, opening at over $250 after closing the previous day around $230. This earnings gap, between the October 30th high of $232.82 and the October 31st low of $243.98, is a hugely significant technical area. Following this gap, the stock rallied to a new all-time high of $258.60 on November 3rd. However, since that peak, we have seen a consistent and sharp pullback. Notice the series of red candles bringing the price all the way back down. As of yesterday's close, the price has now completely filled the gap, closing at $232.87, right at the top of that pre-earnings candle. From a technical perspective, this is a make-or-break moment for the stock. This gap fill level at $232.82 should, in theory, act as major support. If buyers step in here, it could signal that the correction is over and the uptrend is ready to resume. However, if sellers push the price decisively below this level, especially below yesterday's low of $229.19, it would be a very bearish sign. The primary resistance to the upside now sits at the bottom of this recent consolidation range, right around $244. A break back above that level would be the first sign of strength for the bulls. The ultimate resistance, of course, remains the all-time high at $258.60. Let's switch over to the 1-hour chart to get a clearer picture of this recent downtrend. Here we can see the price action since the November 3rd peak in more detail. It's a classic downtrend, with a clear series of lower highs and lower lows. Every rally attempt has been sold off, indicating that sellers have been in firm control for the past 2 weeks. Yesterday's session was particularly bearish, starting with a gap down and a sharp move lower in the morning. The price found its low for the day at $229.19 before stabilizing. This shows the intensity of the selling pressure as the price approached that critical gap fill zone we saw on the daily chart. The consolidation in the latter half of the day shows a pause in the selling, but not yet a reversal. For a reversal to begin on this time frame, bulls need to break the pattern of lower highs. A move above the recent consolidation high, around $234.60, would be a small first step. Now let's drill down even further to the 15-minute chart to analyze yesterday's intraday battle. As you can see, the selling was aggressive right from the open, with the price plunging in the first 90 minutes of trading. It bottomed out at $229.19, and this is where buyers finally showed some interest. For the rest of the day, the price chopped around in a tight range, essentially building a base just above that key low. We saw a small push into the close, which is a minor positive. This price action tells us that the $229 to $232 area is indeed a significant battleground. The question for today is whether this base will hold and serve as a launch pad for a bounce, or if it's just a pause before another wave of selling. Traders will be watching the opening price action very closely for clues. A break below yesterday's low of $229.19 on this time frame would likely trigger further stop-loss selling. Conversely, holding this level and reclaiming the $233 mark could give short-term bulls some confidence. So, let's go back to the daily chart to recap and put everything together. The long-term trend is up, and the fundamental story for Amazon is incredibly strong. However, the short-term trend is definitively down, as the stock has pulled back sharply after a massive post-earnings rally. We are now at a critical inflection point where the price is testing the major support level created by that earnings gap. Let's summarize the key price levels to watch. Major support is the zone between yesterday's low of $229.19 and the gap fill level of $232.82. If that breaks, the next significant support area is around the $220 level. Immediate resistance is yesterday's high of $234.60. A more significant resistance level is around $244 and, of course, the all-time high at $258.60. So, what are the potential scenarios? The bullish case, which I'd give a 60% probability due to the strong fundamentals and the key support test, is that the price holds this $229 to $232 zone. We would need to see strong buying volume come in, confirming that this correction is simply profit-taking and the uptrend is set to continue. A daily close back above $235 would be a good first confirmation. The bearish case has a 40% probability. If support at $229 fails to hold and we get a daily close below it, the technical picture would be damaged. This would indicate that sellers are still in control and could lead to a deeper correction, potentially targeting that $220 area or lower. The main thing to watch today and for the rest of this week is how the price reacts to this critical support zone. Does it bounce with conviction, or does it falter and break down? That will likely determine the direction for the next several weeks. Thank you for watching this in-depth analysis of Amazon stock. Please remember, this content is for informational and educational purposes only and is not financial advice. Always conduct your own research and due diligence before making any investment decisions. If you enjoyed this video, please give it a thumbs up, subscribe to explain the charts, and we'll see you in the next one.